Hello and welcome back to a new video. In today's video, we're going to discuss debt consolidation mortgages and how they work. So what is a debt consolidation mortgage? There isn't technically a mortgage designed specifically for debts, but you can raise a mortgage to clear your debts, and that's typically a debt consolidation mortgage. So if you do have unsecured debts that have perhaps high interest rates, these may be credit cards, personal loans, things like this, you can raise a mortgage, which is typically on a lower interest rate, to clear them. This should hopefully reduce your monthly outgoings on taking one debt and replacing it with the old debt. Now, your personal circumstances will impact your ability to borrow for debt consolidation purposes. For example, your income level. With your income, you'll need to be able to borrow at least the sum of your existing mortgage plus the sum of your unsecured debts that you're looking to consolidate. As a general rule of thumb, this may be 4.5 or 5 times your salary, but it's always worth checking with a whole of market broker to see exactly how much you can borrow with each lender. Now, your credit score will also impact how much you can borrow and which mortgage lender we can go with. If you have a lot of adverse credit, so late payments, defaults, CCJs, bankruptcies, your credit score is likely to be quite low. And because of that, it's unlikely that you'll be able to go with a high street lender. However, as I said before, always check with a regulated mortgage broker and they can find the very best options for you. And lastly, the loan to value of your property is an important consideration when you're looking to consolidate debts. Normally, a lot of lenders, they'll need you to have at least 15% equity remaining in your property on completion of the transaction in order to accept a debt consolidation mortgage from you. So if you are looking to consolidate your debts, your overall loan to value, it can't exceed 85% with most lenders. There are exceptions to this. I'm sure there's some that allow for 90% or maybe even 95%, but check with us at Boon Brokers and we can tell you which option is most suitable. So how do debt consolidation mortgages work? A debt consolidation mortgage is technically a remortgage. So you're raising funds to clear your debts. So it's a remortgage application. And for a broker, it's fairly straightforward. We just put the capital raising purpose as clearing your debts. So is it always a good idea to consolidate your existing debts with your mortgage? This really does depend on quite a few factors. The first factor being the interest rate being charged on your mortgage. Many years ago, when the interest rates were super low in the mortgage market, it was often a no-brainer to consolidate your debts because almost all the time, the debts would have been cheaper on a mortgage versus unsecured loans and other credit card debts and things like this. Whereas now, it's always worth checking just to make sure when you do refinance that the interest rate is actually better. You don't want to consolidate all your debts just to then find out that the overall interest you're paying has actually gone up. And if you are planning to consolidate your debts with a mortgage, it can be quite helpful to have the one fixed payment rather than lots and lots of different payments for all these unsecured loans. So from a management perspective of your debt, it can be a lot easier after you consolidate it in a mortgage. Now, another potential benefit of consolidating your debts into a mortgage is that you can spread your debt over a longer term period. This may be good or bad depending on your circumstances. So most personal loans and unsecured debts, they allow you to take a term to 5, 10, maybe 15 years, but they very rarely allow you to spread the term over, say, 30 or 35 years, like you may be able to do with a mortgage. With a mortgage, lenders often allow you to take your term up to age 70 or 75, or maybe even beyond, depending on the mortgage lender. So by spreading your cost, you're likely to reduce your monthly payments, but just be aware if you are having a longer term period, you're likely going to pay far more in interest the longer term you have. That's why it's always worth speaking with a whole of market expert broker like Boon Brokers, and we can tell you the anticipated interest that you're going to pay over that term period. It's really important. So what are the risks of a debt consolidation mortgage? The first fairly obvious risk is that you're securing more debt to your property. So obviously if you're adding to your mortgage balance, this likely means you may have to extend your overall term period on your mortgage to meet those payments. Now, when you're adding more debt to your property, it just increases your risk of sadly missing those payments or perhaps defaulting on those payments, which may ultimately lead to a repossession. So if you are looking to consolidate your debts onto your mortgage, just make sure that it's affordable for you. That's really important because if you don't meet those monthly payments, there is a risk that your property could be repossessed by the lender if defaults occur multiple times over. Now, what credit score do you need for a debt consolidation mortgage? This really does differ from lender to lender, and the lender doesn't actually divulge to us as brokers what their scorecard is for your credit file. The best thing to do is to download a Check My File report or some sort of credit report from an agency, TransUnion maybe, Experian, Equifax, and just find out what your score is according to those agencies. If you then pass your report to, say, us at Boon Brokers, we can give you an idea of which lenders should accept your credit file. We can then let you know if your case fits their debt consolidation criteria. Now, where can you get a debt consolidation mortgage? Well, the first thing to do is to contact a whole of market directly authorised broker like us at Boon Brokers, and we can let you know which lender you would qualify for. Thank you for watching today's video. If you enjoyed and you want to learn more, read the blog below. If you want to submit an inquiry with us at Boon Brokers, visit our website and click the Contact Us button. One of our brokers would be more than happy to help. They're fee-free, whole of market and directly authorised by the FCA.